I think the Fed's on a good path. I think they do need to be very mindful of the lags between monetary policy and the real economy. You know, when you're in a shower, if there's a long lag between turning the faucet and the water getting hot or the water getting cold, it's very easy to scald yourself or freeze yourself because you turn it and you don't feel much, and then you turn it again, and then you turn it again, and eventually the lags catch up with you. That's the kind of thing that's the risk with monetary policy. And so I think they need to be very careful, and I think the chairman has signaled a desire to be very careful about raising rates precisely because of those lags. And those lags operate on the U.S. economy, and they, of course, operate to impact the U.S. economy through their impact on the global economy.
Yeah, you know, I'm curious as to your take on inflation, broadly speaking. 2.8% year over year increase in wages, 2.9% last month. Not bad, but certainly not something that many would point to, Secretary, as sort of speaking of inflation. But Amazon earlier this week at $15. The trade war with China adding the cost of goods. Do you think we are facing inflationary pressures that perhaps are not being adequately sussed out?
There's always a risk, but I think the evidence suggests that most of the time inflation proceeds very, very sluggishly. And I think you have all sorts of disinflationary forces from technology, from globalization, from many different kinds of competition as disruptive firms enter many different industries. I don't see the kindling for a substantial inflation fire as being in place at this point. And I also think we need to be thoughtful about our objectives. The Fed has a 2% inflation target. We're in the 10th year of an expansion. We've been below target for essentially all of those 10 years. If we mean a 2% average inflation target, then we probably should be somewhat above 2% for a little while here, relying on the fact that even with our best efforts, another recession will come, and when it does, inflation will come down. So I'm both quite serene about there not being a major risk that inflation will accelerate, and also think it's very important to see the 2% figure as an average, as a target, and not as some kind of ceiling on what constitutes acceptable inflation.
So what do you think ends this expansion, Larry, as you take a look out at the global economy and what the Fed is doing and the pace at which the Fed is doing it? What do you think is the greatest risk?
I think there are three risks. The first is that the Fed misjudges the lags and overadjusts, and that sends the economy into recession. I think the second is that complacency is as it was in 2006, 2007, and as it again was in 1999 and 2000. Complacency is a self-denying prophecy. People lend too much, people spend too much, asset prices get too high, and eventually there aren't more buyers, and a process that went rapidly on the upswing unwinds, and you're dealing with the consequence of substantial asset price declines, starting at a moment when assets have been very valuable relative to the economy. And I think the third source of risk is the global geopolitical situation, where I think you have a great deal of brittleness because of the deterioration in relations between the United States and much of the rest of the world, and you have a variety of hotspots. So I would not expect a recession in the next year, but I would be surprised if we didn't have a downturn in the next few years.